Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, now let's take a look again on the gold market. Actually, we're now considering the gold market together with the euro currency because it's a lot of similar patterns are forming right there. So now on the both of them actually. So intraday charts is hand and shoulders, so mostly the same. On a daily chart, we're also considering a bit deeper retracement on the gold, at least to the 1955 area. And actually it has good chance to start, but first we need to take it out on one moment on the intraday charts. In general, as we today said in a euro currency video, that we have cross market analysis and signs that also point on some bearish moments. So first of all, on the Bitcoin market recently we have seen sell-off that was not considering in a Forex market, and this might be the first sign of weakness and strength in the United States dollar. On the Great British Pound, we have the double repo sell is forming on the daily chart, which also brings some bearish sentiment. Although cable right now stands a bit separately, it has different fundamental background, but and at some degree, the other assets that are trading against the United States dollar could follow the same tendency. And actually, in euro currency, we're also considering downward action, and some signs that we have seen in today's video also point that maybe downside action could start very soon. It's mostly on the gold market the same. So although on the daily chart we do not have a lot of things to talk about, it's mostly maybe we will not get the hand shoulders, or at least the good shape of the hand shoulders, but we have the strong engulfing, we have the butterfly, and both of them suggest deep retracement, as well as the existing bearish trend. On the 4-hour time frame chart, take a look what has happened. As we said recently, be aware of the possible starting of the downward action right here, because that might be just minor upper pullback and it's reaction on the confluence. And once the reaction will is housed, this market probably could try to move lower. Currently, the tricky moment stands with the two things. First, let's take a look at the market is flirting with the MACD predictor, and potentially, well, we do not know what should happen to make gold jump up, but potentially this grabber could suggest taking out of this top, and it might be some kind of, I don't know, maybe it's ABCD pattern right to the top of the right arm. It theoretically should be this 20-30 area that we talked about previously. But at this point, at this moment, we have no ability to predict and even to suggest what particular should happen to make gold right now jump right to the 20-30 area. So it's probably will be some extraordinary factor or external factor, news release or some speech or something of that sort. But you need to keep an eye on one thing on the 4-hour time frame chart, on the grabber. If grabber will be formed, don't be hasty with the taking the short position. Be sure that grabber will be erased by the further downward continuation, or if upward action will start, even more, do not consider taking the short position. Although I hope that grabber will not be formed in, because it's a bit looks contradictory to the things that we just discussed on the euro currency and the Great British Pound. So they are mostly aiming on the downside continuation, and the gold market theoretically should follow in the same direction. But well, every market has some specific and some additional risk factors could appear, or maybe the pattern will fail later. But once it will be formed, it brings another risk factor for any bearish position that you are considering. So that's why it would be better to not go against it. So just keep an eye on what will happen here. It's important. And on the hourly chart, we have the head and shoulders pattern part 2. So if first we were considering head and shoulders right there, it has failed with this collapse. Now we have the larger scale head and shoulders that I suppose has more chances to fail as well. It's just because, take a look on the performance. We have quite different market mechanics. I would say we even have the opposite market mechanics to the normal one on the head and shoulders. On the head and shoulders, when we see it, we need to see the weaker downward action on the slope on the head and stronger upward action. And the same story on the right arm. We should see weaker downward action and strong upward action. Here we see quite different things. We have strong downward action and weaker upward action. Once again, strong downward drop back to the lows of the shoulder. So that's why, although we still have the shape and it brings some risk together with the grabber and a potential ABCD ability for the market to be formed right to the top of the arm of this head and shoulders pattern, these chances exist, but we treat these chances as not very significant right now. But anyway, you have to control it. So just watch for grabber and watch what will happen with it later. If no grabber will be formed, the market start dropping below this area, moving back to the lows, it's clear sign that gold market is preparing for further downward leg. So that's what we have here. As you can see, the situation is a bit different compared to the euro currency, to the cable. But at this point, and we have to control the things that we have just discussed. But we hope that, well, that actually these patterns will not be formed and gold market will go together with the currencies. But anyway, let's keep watching and see what will happen.